Globe Aviation, let's take it across to Lemon Tree Hotels. We have the Deputy MD, Rattan Keswani, joining in on the show right now. Rattan, hi, good morning. Good to have you on the show. There's a lot of feel-good factor out there, Rattan. The vaccination has really helped bring the numbers down. We haven't seen an emergence of a third wave just yet. There is that happy feeling out there, and of course, equity markets as well going great guns. Is that feel-good factor really translating into people going out? How are the bookings looking? In Maharashtra, we had the Ganesh Chaturthi long weekend where everything around Maharashtra was actually booked out. But what about across the country with the onset of the festive season? How are bookings looking?
Hi, good morning. Thank you for having me on the show. Yeah, it's looking much better. I would just, caution everybody to be a little careful with the buoyancy and the optimism. It can turn turtle on us as soon as something goes wrong. But yeah, the vaccinations have helped. The confidence also of the guests, because team members are vaccinated, is much higher and they want to go to safer places. Most places, at least for the moment, the long weekends are seeing tremendous uptick both in occupancy as well as in the average rates. So yeah, that's very, very true. Whether it is Uttarakhand, whether it's Himachal Pradesh, even as far as Sikkim, you can see a fair amount of movement. Largely, it is the local, drive-by movement wherever that's possible. Flights are looking very good. I'm right now sitting in Coorg, where we opened the second Aureka yesterday, and we've already got some very robust inquiries in the weeks ahead. So yeah, I would share the optimism, but I just put a note of caution to it. If the next 45 odd days, remain a bit stable, I think the last quarter should be very robust.
Yeah, absolutely. Fingers crossed at that. So tell me, how many of your properties are currently operational, and are you saying that they're fully occupied? What's the occupancy level?
No. So see, the fully occupied are mainly in the resort locations. Goa has just started the uptake. So we've got all our hotels open. The city hotels, unfortunately, are not fully occupied, whether it's weekends or the weekdays, because the dependency on the segments is very, very different. So the city hotels are at least inching upwards of the 65, 66. Some of them are reaching the 70% mark already, though rates are about 20% lower than they should be. Like I said, for the resort locations, it's a long weekend or the natural weekend where occupancies are close to about 80%, if I was just take a bit of a running average. And then again, average rates are back. So that's the two pieces of it. But all hotels of ours are open in full form in every single city, whether tier 1 or tier 2 or resort locations.
Hi Rattan, this is Mubina as well joining in. In Q1, for the industry, the revenue per room was down by almost a good amount of, a good percentage of 40 to 45% is what I'm understanding. But that's of course Q1, when we had the second wave of COVID. The base quarter as well was totally jumbled because of the first wave. What are you seeing now in terms of your revenue per room? What are you offering in terms of packages, etc., also to boost the revenue per room?
See, one is, comparing Q1 to Q1 last year is a bit of a misnomer. Q1 last year, the segments that moved were very different. A lot of people were doing quarantine room nights where the project teams were staying because they've been housed in hotels. We were bringing in Indian citizens back from the various countries. So the mix and the revenue mix was completely different. Q1 here is now bringing some of the segments back other than the corporate segment. So that comparison should not be done because we need to study the segments that are moving. Q1 was hard hit this time too because of the second wave. And it was a much higher felt wave than anything that we saw the previous year. But the numbers from Q2 onwards have started to pick up quite robustly. And if you were to say from a classical module, Q1 last year was about 50% or 55% lower on average rates and occupancy. That tweaked back, became about 40-45%. Is coming back to a range where about 30% of natural ARRs at about 60% of the natural occupancies. But like I said, if the next 45 odd days go well, I think most cities, barring maybe the tier 1 cities, will be at a robust 65 odd percent and maybe about 15-18% short of classical average rates at that time. The tier one has a lot of dependency on corporate traffic. For most city hotels, corporate travel used to kind of contribute about 50-55% of the natural business. That hasn't picked up at all. Most of the offices, etc., haven't really opened. You must have seen the latest announcements where some people are opening, but at 30%, travel is restricted. Their international travel won't come back for the next 18, 20 months. So there is where the problem lies, because the movement is still from the trader, MSME, SMEs, staycations, holidays, because offices haven't opened. So the segments are completely different. And it'd be wrong to kind of compare one to the other in its natural fold. But I do expect Q4 definitely to be reaching close to a pre-pandemic level, except the average rates might kind of end up about 10-15% lower than natural.
Okay. Right now, Rattan, I know you spoke about briefly how many hotels of yours are currently operational. If you could talk to us about how many do you have across the different parts of the country? And I know we are just coming out from what I can imagine has been a very, very tough time for you. You're cautiously optimistic, but any plans to, perhaps amp up the offerings in terms of number of hotels, number of rooms?
Okay, so let's break it up into three parts. We are largely represented over 50 odd cities with over 85, 87 hotels right now. And like I said, all those hotels are open. We're the only ones who opened 9 hotels during the pandemic. So it's been a strong performance in even the development field. We had a lot of hotels contracted to open during the pandemic. Like I said, 9 opened, though about 6-7 months later than they should have. Most of the others are not slowing down, except the fact that we will probably open them in, the first quarter of the next year or the summer of next year. So that robustness will continue, and the targets that we've shared in what our openings are, except our large hotel that will open in Mumbai, which is the Aureka Mumbai, which will probably tweak into an opening in, second quarter of 23 or the third quarter of 23. Again, the pipeline is very robust. We are at the present moment chatting with almost 20 odd owners for their hotels. And that activity hasn't stopped at all. Because the owners have had a shortfall in being able to access finance, a lot of them have therefore had to hold back the pace of their product or their kind of development. But everything is reasonably on stream because now labor is available, quarantine doesn't work, borders are open. So the movement of goods and people is easier even to put the development into track. So yeah, I expect most of the projects to be delayed not more than 8 to 9 months than we earlier anticipated. Some may drag into an 11-month delay, but nothing more than that. Hardly anybody's pulled out of the development stream. And like I said, we're adding some more because some hotels that operate on a standalone basis are now reaching out to us to help them operate theirs. So that pipeline is also very robust. So I think we should have a fairly robust coming calendar.
Rattan, just getting back to the point that you were earlier making about city hotels not doing as well, but resorts and, holiday locations are doing better. How long before we actually see corporate travel pick up?
So let me again break it up into 2 parts. Some locations, conferences are picking up, which is a good surprise. Having said that, there are limitations in the cities or the number of people that you can host a conference for. So that's a bit of a bummer. Weddings are picking up. Having said that, in the tier 1 larger corporates, I expect the travel to start from maybe end November, but it'll be at about 30-35% of a normal business kind of movement. And that won't pick up to more than 50-60% Q4. Like I said, because the dependency, almost 55% of the segment comes from corporate. That will be the one that will come into play, hopefully to pre-pandemic levels, not before, summer of next year or autumn of next year. May have a little shortfall, particularly because international travel, I do expect to be limited from a corporate point of view. Because like I said, most of even the large corporations aren't opening their offices. Even if they are, they're restricting travel within the city if anybody's moving. However, it's much better in tier 2 cities where the restrictions are less because the hotels are smaller, and there we're seeing very good robustness in corporate conferences and corporate FITs. But we're seeing an uptick in both these parts. But I think it'll be some time before the tier 1 comes into play. And because online agencies have gone into a bit of a pricing schedule that is a bit of a market spoiler, we are holding out on our pricing, and because we expect the robustness to come back and our occupancies to be supported by our customers. We're very happy with the product value design that we put in, as well as the safety standards that we put in. So we expect that they will come back at the pre-pandemic rates and levels in about 6-7 months' time. And thankfully, we weren't so dependent upon international traffic in our hotels. So therefore, the impact on us will probably be much less than it might be for some others.
Rattan, so good to have you on the show, and we really hope that the next 45 days pass off smoothly and we do see some good amount of travel up until the new year perhaps.